Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, December 30th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Your likes, your shares, your comments is what keeps this channel going. Additionally, if you like this video, more people will see it because that's how YouTube algorithms work. Today we will cover stocks, junk debt, dollar, and interest rates. Stocks moved very little during the week. I have a pretty strong suspicion that we're going to go higher from here when the stock markets open next year in a few days. Selling in high yield bonds was muted so far, and this is good for stocks. Dollar is also approaching what I call downtrend levels or bearish levels. Gold and euro are rallying, and this could continue. So it's important if you're trading gold. And we'll also look at treasury bonds, and interest rates could be coming down. If you are a subscriber, then stay tuned. We'll cover quite a bit of stocks this week. Natural gas trade, QQQ trade. This is a counter trend trade, very unusual, but we do it occasionally. Many other stocks like Hong Kong, Mexico, Indonesia, Spain, Amazon, Boeing, Costco, Pfizer, General Electric, CrowdStrike, Salesforce, Wind Resorts, etc., and Pinterest. So stay tuned. If you're not yet a subscriber, consider signing up by going to MasterChartsTrading.com or click the link in the description of this video. S&P 500, we're looking at S&P 500 E-mini futures. You can find this symbol in TradingView.com library. It is ES1 exclamation point. This is TradingView.com interface. On this interface we have my lines, this green, blue, red, and yellow lines. These are my proprietary price action indicators, and you can get them by going to the link in the description, by following the link in the description. What they do, these lines, is they help you basically visualize price action. They also help you to decide whether or not you want to be buying or selling. Generally speaking, do you want to be buying stocks or any security, or selling any security in question? In this case, S&P 500, the system, the algorithm, is still saying that we are in a downtrend, in a bear market. Notice this downward facing arrows. These were short signals. They were successful. This is back in May, June of 2022, this year. Still a few days, 2 days left, and this downward facing arrows here are in September of this year, and they were very successful. Obviously, if you sold short, you can also buy put options. If you buy put options, you are placing a bearish bet. Now, if you listen to my previous videos, I was saying that this candlestick where I'm hovering on October 13th seemed like a bottoming candle. So it is a hammer candlestick. Hammer means we have a where I'm hovering, it's a like where you hold the hammer, and this green body of the candlestick is the head of the hammer. So hammers happen when security is attempting to bottom. So stock prices came down, but they rallied at the end of the session. And lo and behold, indeed, this is what happened. We had a continuation of this rally towards this red support resistance line. So notice what happened is previously we sold short at that level. Now, I was very reluctant to do that because I thought that this was a bear trap. Bear traps happen when we sell short, but the security rallies on you. So as of right now, I think I was correct, because this movement to the downside is quite small. So potentially you could have made a little bit of money here on the downside. Let's say you shorted at the red line, and then you probably made a little bit of money here on the downside. Now, I am, the way things are going, I'm just not so certain that we are in a downtrend anymore, and I think we're there is a good chance we're turning around into an uptrend. So uptrend, technically speaking, since this is a technical trading website and algorithm, when or if we close above this blue support resistance line, which is currently for S&P 500 at 43.18, then we'll say that the bear market that started in the beginning of this year, downtrend, is over, and we are now in an uptrend, and potentially we'll start making new highs, all-time highs in this case. So far, so again, the algorithm is still thinking that we're in a downtrend. I'm looking at this chart and I'm finding signs of a potential bottom. So if indeed we have bottomed, then we just need to basically rally, clear this red support resistance line, and then continue higher, and then close above 43.18. If that happens, then we will say that now S&P 500 and general stock market is now in an uptrend, and we should think about buying stocks. We should think about looking for opportunities to buy stocks, basically. On the weekly chart, the selling was quite muted. So looking at this weekly chart, so weekly meaning that that means that each candlestick is 1 week's worth of activity. So this is the last candle where I'm hovering right there, and if anything, we got 2 weekly candles with a shadows or the tails out of the bottom. This indicates a potential bottoming pattern, because this means that the price came down towards the lows, but then the bulls, or people who think the stock market will continue higher, came in and bought it out. So this happened on 2 occasions, on last week and this week as well. So this is what's making me somewhat optimistic, and I think that there is now a good chance that this selling is over and will continue higher into next week. Here's Dow Jones. Now Dow Jones actually broke out into a bull market right there where I'm hovering on November 11th, so possibly slightly later, around November 18th or 21st here. But now Dow Jones is now in an uptrend, in new bull market for Dow Jones. So Dow Jones is, not a lot of stocks, but they're important stocks. So we will continue watching this, obviously, and as of right now, S&P 500 is still in a downtrend, but Dow Jones is now in an uptrend. So this is why another reason why I'm somewhat quite reluctant to sell short, actually, and I'm actually thinking about buying stocks. In fact, one of the trades we're doing right now is a counter trend trade, where we're buying QQQ calls. So calls meaning that we're expressing our bullish bias, meaning that stocks will continue higher. Looking at this chart, Dow Jones has broken out into a new bull market. Bull markets imply new highs. So looking at weekly chart of Dow Jones, all-time record highs would be up there. At the high is 36832. So I'm gonna just show how much that is, and it's not that far. All-time record highs at 10% away for Dow Jones Industrial Average. So this is good news, I think. So this year we had multiple events. Biggest one, of course, is the war in Ukraine that is weighing on stocks. Of course, also the Federal Reserve increase in interest rates is definitely weighing on stocks. But if you stay tuned until the end of this presentation, I will actually talk about treasury bonds as well, and why I think that interest rates are going to continue lower. So in other words, bonds will gain in price. Here's NASDAQ. So NASDAQ actually is next to lows, if anything, and it's really quite weak, and at the same time it's very oversold. So I think that a rally is very reasonable, at least towards this red support resistance line. which is about 15% away from the current price levels. So notice that the price for Nasdaq hasn't even touched the red support resistance line since late August. Compare that to S&P 500, where we already were about this red support resistance line in November. So this is the reason, another reason why I think that Nasdaq is very oversold, and I think a rally is quite possible. Now again, it is still considered a counter-trend rally at this point, meaning that we are still, the algorithm still thinks that we're in a downtrend, and if we get to this red support resistance line, we should think about selling short, as in, for example, happened back here where I'm hovering in August of this year. So let's see again what happens with Nasdaq. Russell 2000, generally speaking, all the major indices are quite have high degree of correlation. They're doing about the same thing. Notice the downward facing arrows, short signals here back in August for Russell 2000 small caps index. Now, what I really like about this chart is the way the indicators are curving down towards the price action. In fact, we can turn on the projection of indicators into the future and notice that the indicators are actually curving down even further. So the lowest level for a few months ahead is going to be achieved right there on January 17th of this year. And a while back, here in November, late November of this year, I did a couple of predictions. What are some of the potential ways in which price action will unfold. So notice this upper line. I'm going to turn on what's called a ghost feed. So this is my ideal scenario. We kind of trade sideways and then reach this level around mid-January and then break out higher into the new towards new highs. So ideal scenario, and I also think that this is strongly has to do with the war in Ukraine, and hopefully by this time, at least I'm hoping that basically Putin will just go away somehow or is removed from power, one way or the other. Hopefully in a peaceful way, and hopefully the whole thing will just end, and then Russia will need to pay the reparations. Now, that's obviously not necessarily going to happen. It's a potential and very hopeful scenario. Quite the opposite of that is another scenario where there is no resolution, and in fact, around the same time, around mid to late January, we get some sort of a very negative thing. So this is a yellow projection. So very negative thing could be a nuclear weapon going off somewhere in Europe. This would be clearly a very negative thing, and potentially we could see new lows in that case. So a crucial, really crucial several weeks we have. January is going to be extremely important for various reasons. I think the biggest one, of course, is the war in Ukraine. If you haven't heard President Zelensky of Ukraine speak to the Congress, I think you should. And I fully support President Zelensky in what he is asking for. So again, looking into the future, hopefully some sort of a positive resolution will come to be, and we will just move on from this insanity into some sort of a bright and hopeful future. Looking at junk debt, high yield bonds. So as always, I'm going to show high yield bonds, junk debt, JNK, on weekly charts. We're looking here on the bottom here. It's a yellow, this graph right there on the bottom. It shows a correlation between high yield junk debt, high yield bonds, and S&P 500. So notice that the correlation is very high. Currently, the correlation is 0.92. In other words, 92% of the time, S&P 500 or stocks in general are doing about the same thing as high yield bonds, junk debt. So junk debt is important to the health of the stock market. So right now we're looking again here, so several opportunities to sell short high yield bonds, junk debt. I was just didn't really want to sell it, and again, because of the correlations to S&P 500, I was not sure really if I wanted to sell here. So far I was sort of correct. I mean, you probably were able to make a little bit of money here at this low on December 28th, but even today, yesterday and today, we saw a movement higher. So relatively muted selling for high yield bonds. Notice this weekly just big movements here, but again, I'm reluctant to sell short. I want to see what happens. I think we will see at least an attempt higher for high yield bonds and for stocks in the near term, next couple of weeks. Dollar on the other hand, so dollar index, notice DXY, dollar currency index, was in an uptrend since we called it in July of 2021. There's the breakout right there above this blue support resistance line. This is a weekly chart, and then it just never stopped. Eventually we got to this point right there, September 26th candle, rather weekly candle, and then strong selling, which continues to this date. In fact, we just closed, this is a new closing low today. So notice on this chart again we have 4 lines, and the red line is very close to the price action right now. So red line meaning that if we close below that level, in this case it's 102.440. So notice the line moved up. So notice that my line is now moving up. Again, we can project into the future to see where the lines are going to be in the future, and notice that they are moving up. So notice that price right now, where it is right now, it's about let me see, 103.494, and notice that the red line is going to be in February going to be already higher than the current level. So in other words, there is a very good chance we're switching into a downtrend for the dollar. So dollar will no longer be making higher highs and higher lows, but it will instead start making lower lows and lower highs, and we're very close to that level. If dollar decides, continues doing what I just described, then dollar obviously will be in a downtrend. Notice we can also look, instead of looking at DXY, which is a several currencies, it's a basket of currencies, we can also look at the euro versus US dollar currency pair, and notice that actually it's approaching breakout levels. Breakout levels for euro versus US dollar is above the blue line, and if it closes above that level, we will say that euro versus US dollar is now in an uptrend, and we'll start thinking about buying it. So again, this is important if you trade gold. We do trade gold, and since dollar has been trying to make lower lows and lower highs, so this, for example, this is the top here in September of this year. Notice gold is doing the opposite. Gold is actually made triple bottom. There's a bottom on September 28th, on October 21st, and then again on November 3rd. Triple bottom and a rally. So right now the system still thinks that we're in a downtrend, and it would consider selling short at the red line. Once again, because of the way other moving parts, so to speak, of the market are behaving, I was reluctant to sell short. So far I was correct. It looks like we had a bunch of bear traps, downward facing arrows. Bullish levels are right above the blue line, currently at around 1900 for gold. So if dollar continues lower, gold should benefit. And then very briefly, let's look at TLT, Treasury bonds. This is 20+ year Treasury bond fund. So when Treasury bonds go up in price, Treasury yield goes down. So in this case, we have made a multi-year low here in October 24th right there, and then continued higher. Now we haven't gotten to this red support resistance line and we bounced back. I think at this point I'm pretty sure we're going to see, because if we look at TYX, I'm pretty sure we're going to see a move lower for the bond yield in the next few days, because notice that Treasury bond yield bounced off this blue support resistance line and rallied. The opposite is happening to the bonds. Right there, it topped out in December and continued lower. I think it will bottom here and continue higher from here. So by extension, Treasury bond yield will continue lower. This should help obviously the economy, because many people borrow money for mortgages, etc. All right, that's it for this week's recap. Head over to MasterChartsTrading.com. Click on sign up. I have 2 products and 2 packages. Trading indicators are these lines on the chart. You can trade pretty much anything under the sun, as long as there is open, high, low, and close. As long as it's a tradable product. So you can have the same lines on your chart of TradingView.com. This is TradingView.com interface. Once you sign up for a free TradingView account, sign up on my site, MasterChartsTrading.com, and then send me your name of your account on TradingView, and I'll open the door for you for my indicators. I also have newsletters. I send out daily updates about what we trade, and the weekly members-only video. So in this week's video, we will cover all of these various stocks, like I said in the beginning of the letter of the presentation. So also, obviously, the best deal is to get both of them together at $59.95 per month. I think it's a great deal, so consider signing up. Again, don't forget to hit the like button, subscribe to this channel, share this video. Thank you for watching, and have another great trading week. Bye bye.